Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital channel. Today we're going to be focusing on the historic MACD that I've recently mentioned and also coupling that analysis with the EMA analysis that I've also recently shared with you guys here on the YouTube channel. So let's dive right into the video because there's lots to cover. Subscribe to the channel for more videos like this in the future and let's dive right in. So just quickly recapping. Overextension towards the downside on the histogram right over here, coupled together with higher lows on the weekly, that's a hidden bullish divergence in the MACD. Really historic stuff because on the daily, for instance, you've never seen such a downside deviation in the MACD ever, or at least for many years. So this truly is a historic extreme situation and downside deviation in the MACD. So the fact that we're seeing this sort of extreme deviation coupled together with bullish divergence in not only the moving averages, not only in the histogram as well, but also in the price action with multiple daily higher lows setting in, these are all positive signs for a reversal for Bitcoin. We of course need to hold the 30k region because that 30k region right over here is tying in with the 50-week exponential moving average, and as long as we hold here, then we will still preserve the bullish momentum that we lost on this crash and the bull market will still be intact. But what we really need to focus on is, well, this support truly just needs to hold, and if it does hold, then it will be a very similar situation to what we saw in 2013 where we saw a 80% crash. But this crash still maintained above the 50 EMA, right over here and right over here, not even contacting it, but still maintaining above it to preserve the bullish momentum before seeing further upside. The problem though would be if we were to now be at the 50-week exponential moving average, which we are now, but like in 2014, we retrace towards it, rebound from it, and have a weak rebound, and then just try to rebound from it again, but actually lose it as a support and then actually test it as a resistance before rejecting towards the downside. That's something that we wouldn't want to see right now from this situation right over here, because we are resting at this support and we really need to confirm that as a support to avoid further downside. So that's really important to watch out for, because if we do lose that support, or at least if we have a weak bounce in the coming weeks, then we might revisit this 50-week exponential moving average and actually break down from it and turn it into a resistance before seeing further downside. Because what we want to see really is something like this, where the 50-week EMA holds as a support and holds as a support here, because that precedes upside. Of course, this was in a new macro uptrend, so that's easy to say. When Bitcoin is in a new macro uptrend, we get those support tests and that's great. But of course, in 2013 we saw a period of really crashing price action which was still able to maintain above the 50-week EMA, and we're probably more resembling this situation. This was a 80% crash, whereas now we've got a minus 53% crash. So similar crashes, but we're still maintaining above the 50-week EMA, and we really need to just continue to do that. So are these crashes, 53%, how is that really a outlier crash in the context of this blue 50-week EMA? So we've covered the 80% crash right over here. It maintained above the 50-week EMA. But actually, when we got a bear market after the 2013 peak, we saw a 65% crash before revisiting the 50-week EMA rebound, and then we lost that EMA. So that is interesting to note, because when we peaked in 2017, we saw a 70% crash before rebounding from the 50-week EMA, but actually losing it in the end. And then in June 2019, we also got a 45% crash from the peak before rebounding from the 50-week EMA, rebounding a bit, but weak, very weak upside from there. And then we just crashed once again. So now we're in this portion of price action, and we really need to see a strong rebound right now. And coupled together with that historic development in the MACD, there is reason to be bullish about this bounce. But could this just be a bounce? Because if it is just a small bounce, a small rebound, and we can't close above 38, we can't close above 45k or even 50k, which would be spectacular. If we can't get those levels on this rebound, then historically speaking, a 54% rebound from the, or at least a 54% crash from the highs towards the 50-week EMA, well, these sort of crashes have happened before in a way that have led to rebounds from that 50-week EMA, but have actually lost that 50-week EMA later on, resulting in further downside. So we have seen situations where that bounce hasn't amounted to much after a deep crash, with the exception, of course, of 2013. And I'll leave it to you guys to just decide how similar this 2013 period is to this current 53% crash period, because we saw a deep crash here, but the bullish momentum was preserved and we saw new highs. How similar that situation is, of course, this is an outlier in terms of history, because history suggests that whenever we see a crash into the 50-week EMA, we get a weak rebound and then we break down from it. Crash into the 50-week EMA, rebound, and then we lose it again. And then once again, crash into the 50-week EMA, and then we rebound a bit from it, and then crash again. So what are the odds? Somebody asked me on Twitter, somebody left a comment, what are the odds of this being a stronger rebound in an effort to just reclaim those levels? Well, I'm going to be taking it level by level, and that's probably the best way to go about it, because history isn't too kind to us in that respect, because only 2013 was the saving grace where we saw a crash maintain above the 50-week EMA. So that's just one out of a possible few scenarios. So the probability of this being a strong rebound, by standards of history, just being level-headed and just data-driven in the approach, this is likely to be a rebound before further downside to just test this 50 WEMA once again and potentially lose it. But I don't want to rush that conclusion, because things are looking pretty positive on the MACD. But then again, that historic situation on the MACD could just result in a bounce. But of course, we have to focus on these key levels. If we claim those levels, then that MACD situation is going to continue to impress us and become even more and more bullish. So we really need to take it level by level, focus on the MACD, what that situation is like, and then we can start talking about that reversal, this rebound being a full trend reversal, just to be not like a relief rally like we saw here or here or here, but more resembling something like this, where we actually get a support test after a retracement period before continuing in the bull run, after a retracement period before continuing into the bull run. That's what we want to see, and taking it level by level would be the best way to go about it, because at the moment we are holding this support, this 50-week EMA support, but we are at this 38k resistance right now. It's great that we've wicked into there already, even actually wicking beyond there, so tapping into those sellers, potentially rinsing them, and now we could potentially see this area weaken in the sell side pressure. That would be great. If we can get a weekly close above here, that would be fantastic, because that would mean we'd revisit the 45 region, which is probably the most important region, not only because this is a previous support region, but this is the previous support region of the Wyckofian distribution range, which I spoke about in the previous video. So feel free to check that video out, but this is the be-all and end-all, and that's going to decide whether this EMA rebound is just a relief rally or actually a bullish trend reversal after a deep crash. That's about it for the video. Thanks so much for watching today. Please subscribe to the channel for more videos like this in the future, and like the video if you'd like to see more content like this going forward. Thanks so much for joining me today. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.